like everybody's like, oh, it's huge. I'm like, it's still not huge.
It's not huge.
It's ginormous. My wife left me. My children disowned me. It was terrible. That's stupid. That just seems aggressive. Is it possible? All right, so what's the company worth? Amazon stock. This is the one I got wrong so many years ago. I shorted it. It went nowhere, but straight up, I got killed. I cried. My wife left me. My children disowned me. It was terrible. For the record, I was not married before, so I'm just kidding about that. But Amazon stock is a doozy, Mo. Let's pull up this Amazon stock in our software.
It is a doozy. And I always go back. I've said it in multiple videos, and so have you. It's amazing when a company says they're going to do about $150 billion during holiday season and break even.
So I'm going to drop a very interesting comment at the very end of this video. So make sure you watch this. But let's look at the positives of Amazon. Okay. One, it's ginormous. $514 billion in revenue.
Wow.
But here's the deal. Negative net income. And somebody was telling me it's because of Rivian. They're marked down of Rivian shares. I did not verify that. But even when their 5-year profit margin is only 4%. Their gross margin is only 13.2%.
Yeah.
Their 5-year average free cash flow is only $6.6 billion on a $1 trillion company. That's 160 times or 150 times more money. Return on invested capital in 5 years is 9%, which is our minimum. We want to see at least 9%. Man, it's a doozy, guys.
Going back to that profit margin, the company did say it was from Rivian.
How much of that?
I can't remember.
Can you look that up real quick while I go through the 8 pillars? So what he's saying is the Rivian investment, the SEC requires companies to mark down to mark their shares that they own of companies to market. So if the stock goes up 20%, they do the 20% gain as earnings. Buffett and Munger have talked about what I'm about ready to say. That's stupid. It shouldn't be done. You should exclude that out. Now, here are the 8 pillars. The only check marks we have are a reasonable ROIC and revenue growth. Now, somebody could argue very easily, Paul, they're reinvesting. I get that. And I said on Twitter recently, just the other day, and by the way, follow me on Twitter. I'm very active talking about investing in stocks, a lot more than Instagram. So here's the Twitter handle, how you follow me. But I said on Twitter, at some point, I got to start seeing the cash. It's a big enough company. It is ginormous. It does $515 billion in revenue. At some point, show me the cash. Mo, what'd you find out about Rivian?
Net loss includes pre-tax valuation of $12.7 billion. The year before, it was a gain of $11.8 billion.
So 2002 net loss. So what was the loss not including that?
Not including what?
Not including that Rivian loss.
I'll probably have to go in there 10K. But it wouldn't have the current year, though.
Okay, so $12.7 billion loss plus their 2.7, so a $10 billion gain, which is still, like, everybody's like, oh, it's huge. I'm like, it's still not huge.
It's not huge. I mean,
all right.
Relatively speaking.
So let's see what analysts are saying about Amazon. Remember, guys, analysts, you got to take what they say with a grain of salt, because look at this. $1.72 for this year in profit, $19.48 for 3 years from now.
Where does this even come from?
And this is 31 analysts. Guys, maybe. Look at their revenue. So $19.48 per share. How many shares outstanding do they have?
Let's see here. 10.22 billion.
Okay, 10.22 billion times 19.48. That's profit of $200 billion. After taxes, on on revenue, analysts are showing for 709. So they're expecting a 28% bottom line margin on Amazon. When in the last 5 years, their bottom line margin has been 3.9%.
Yeah, where's that going to come from?
That just seems aggressive. Is it possible? Sure, but their gross margin isn't even 28.9%.
Right.
So everything's just got to skyrocket. This is where I think analysts are just, I don't get it.
And how do they do that? That's, what skyrockets?
I don't know.
Their cloud computing, that their AWS is shrinking.
It's not shrinking. It's growing at a slower pace, but it's also the leader. So I'm okay with that.
It's true.
But that's where they're making all their money from.
It's not like you're going to get a big spike in that.
Yeah, that's what I think. I just don't see how that's going to happen.
It just happens out of nowhere.
All right, so what's the company worth? So guys, one of the things that our stock analyzer tool does it's so great, and it was the reason why it was used 1.3 million times last year by our users, every investment's the present value of all future cash flow. And this allows you to make assumptions about those because we don't know the future. We have to sit there and make assumptions about the future. We have to sit here and understand, okay, what's going on with the future? What assumptions do I make? And what return do I want to get? That's what the stock analyzer tool does for you. So guys, before we get into that, check out this video more about our software and how it can help you out to get a much better return on your money. I created the software that you're seeing on the video and behind me because I needed software for myself. This is not something that was created for other people and I use some super exclusive, expensive software. This is the software I use. And even better, we have this community of thousands of people there. And the reason it's so helpful is It allows us to eliminate the emotional fear that makes people make the bad decision investing. The right investing is 20% about the numbers and 80 or 90% about your temperament and emotion. And that's why it's awesome to have this community. The tools help you on the numbers. The community helps you on how to view your investments and your money. So stop making those terrible decisions that all your idiot friends make when they follow companies just because they like the company. For a little over $1 a day, you can have this entire software package. It'll change your entire future of investing and your money. So sign up now, risk-free, everythingmoney.com. Check it out. All right, so I'm going to do a 20-year analysis. And remember, still stay to the end of the video because I have a comment to make about Amazon that it'll be a good learning lesson for everybody, but we'll also go in here. So Mo's going to do 10-year analysis. I'm going to do 20. The reason I'm doing 20 is Amazon's the kind of company I want to own forever. And if this is making sense to you, please subscribe to the channel so you can see more of our videos. All right, I'm done with mine. Mo, let me know when you're done. But the stock is currently at 101. It was a 20-for-1 split, but the all-time high, I think, was 188 or 184 or something like that. Let's see where it was in our software. 188 on July 13th, 2021. Yep. So about a year and a half ago. All right, Mo, give me your assumptions for the next 10 years.
All right, I did 6, 8, and 10.
I did 3, 5, and 7 for 20 years. So, and now, by the way, the longer you go, the lower your revenue growth should be. Profit margin.
I struggled here. 1, 3, and 5.
Oh, wow.
I just ran the gamut.
I did 3.5, 5.5, 7.5.
Okay.
Because I think this last year has been a fluke. You take out the Rivian investment, and I just didn't worry about that.
Okay.
Free cash flow.
Free cash flow.
I did 3.5, 5.5, 7.5 because there are the free cash flow has been hit a lot because they have put a lot of money into capital expenditures. Come look at their cash flow statement.
I just wonder if they're ever going to stop doing that.
They will, because look, they had that here. They stopped here. Look, they had free cash flow leading up to these last few years.
Mm-hmm. And then it was 2 years of...
And then just and then look at how they increased their capital expenditures.
Yeah, I
Big
guess
time.
It makes sense that they did because it was COVID. They increased their workforce by 104%.
Well, but that's not going to affect your capital expenditures. But the capital expenditures,
but everything else, they increased their workforce to
do a lot more things.
A lot more, yeah.
Okay, so what'd you do for PE?
I did 14, 15, and 16.
That's exactly what I did. Okay. Same with price of free cash flow.
Okay, and then my return is 11, 12, and 13%.
I did 10, 12, and 14.
Okay.
And guys, remember, 20 years at 7% is 6.8 times revenue growth. So they did $500 billion. This 7% a year for the next, it's about 4 times. But still, 4 times revenue, that takes them to $2 trillion in revenue in 20 years. Is it possible? Sure. Is it probable? That's the question.
Okay.
Hit the analyze button. I have a low of 25, a high of 60, a middle price of 40. Mo, what do you got with your ridiculous numbers?
I have a low of 8, a high of 52.50, and a middle ground of 28.
Now, Mo's got a very wide range.
Yeah.
And I think his assumptions for profit margin, free cash flow margin are off. I don't agree with those at all. However, that's the point. Get a wide range and sit there and say, is it selling for less? Guys, if I change this to 10% on everything, what do I think the value of the company is based on my assumptions? It's still not in the high range.
Oh my gosh.
The stock is overpriced. Now, Mo, what did you get when you did that?
At $9.65 on the high side, $32.50 in the middle ground. That's why I put everything at a 10% annualized return.
Okay.
So my watch list for $60, but even at $60, I don't know if I would do anything with it.
Now here's my statement. Amazon, even though I have it on my watch list at $60, is in the too hard pile for me.
Yeah.
And the reason it's too hard for me is I'm not understanding how they're making money in all their divisions. And I just look at that going, gosh, there's just so many, like everybody, when I see average people telling me, Paul, you don't get it. It's like Bitcoin. I don't get Bitcoin. It's a too hard pile for me. And people say, you just don't get it. Okay. If the masses are telling me I don't get it, that means they probably don't get it either. And that's the reason why I have no FOMO. I look at Amazon and say it's a too hard pile. I'm going to wait. If it hits 60, I'll sit there and say, does it make more sense now? Yeah. So guys, again, please sign up. We have a special of $7 or 7 days on this software. Check it out, everythingmoney.com. Appreciate your time. Take care.